a healthy financial position, but like many in the industry, hurt a little by the impact of the pandemic on majority sectors of the economy.
On the personal and business banking side, however, we did see a lot more impact, as one might expect. And if you do think about the broader impact of the pandemic, the informal sector, the SMEs, employed individuals in the formal sector would typically be more impacted by the impact of the pandemic, given the sensitivity of those businesses to that risk. But again, even though we did see a drop on the revenue and a drop on credit loss ratio and cost to income coming down somewhat, reducing to 59.6, but still quite steady, below 60% in that respect.
The lender's shareholders will, however, walk away happy with a 13% increase in dividend payout, according to the chief executive Stanbic Bank Holdings.
We're still waiting for approvals for a dividend payout of over 95 billion. As expected, a slight dip from last year, and I think for all the reasons that have already been mentioned. I know many of you will be tracking the performance of our share. It's held very steady against a very challenging macroeconomic environment on the back of the pandemic. The demand for the share remains very strong. Liquidity is low, but that all holds good for us in the future.
To experts and industry captains, all hopes now lie in the end to the pandemic fever, aspirations now helped by the introduction of vaccines in major markets.
For as long as the threat of COVID is hanging over us and we continue to make decisions between lives and livelihood, that is continues to be a risk on this until, as a global community, we get herd immunity. COVID-19 will continue to be a threat. Third-party risk, the business models are changing, partnerships are growing. How we manage third-party risk is going to be an issue.
According to the Central Bank's quarterly financial stability review, the banking sector profitability declined by 4% in the year ended December 2020.